So we're going to talk about refinances. Everyone know what a refinance is. Check this out. 50% of homeowners really don't know what a refinance is. Right, to finance again, right? We're going to pay off the current loan with a new loan for various reasons. But keep that in mind. For anyone whose job is database marketing, which is everyone in this room, please know that of those people in the database, up to 50% of them, half, don't really know what a refi is. And they're too embarrassed to raise their hand and say, hey, I don't know. So they do nothing, because that's always a good strategy in life, right? Do nothing. Yeah, almost never. Well, at least with boondoggling, like you're doing stuff, you're just doing all the wrong things. But like, yeah, do nothing, by the way, is never is a strong word, is rarely a good answer. So just think about that. Now, on your question, Sarah, which is like, hey, people are refinancing and it's all about rate. You're feeling like you're being shopped more on a refinance. So I'll start with this. Refinances are commodities, period, end of story. They are, for the most part. So you have to know if you're working with people who are looking to refinance, you and your service are going to be commoditized. And sometimes rightfully so, where I think on a purchase, it's way more rare to be able to commoditize what we do, because on a purchase, there's contractual closing dates. There's a certain level of service that has to be adhered to, and you can really screw it up and hurt somebody if you screw up their financing on a purchase. On a refinance, unless it's a really unique situation like, hey, I need to get this money out so I can pay the IRS so I don't go to jail. Okay. Hey, I need to get this money out so that I can pay the heart surgeon so my baby can have heart surgery. Like think of all the crazy things that could happen. Hey, I'm getting divorced and the judge states this is my last date, I have to get it done. Most times on a refinance, there's not a time constraint. No one's going to end up with a moving van full of their stuff and nowhere to move it to. So it will be commoditized. And I think you have to understand that going into it. If you're a loan originator who's originating a lot of refinances, is that you can't be all things to all people. And you do what you do because you're great at your job and you're an advisor and you're elite and you take a consultative approach. And if it's truly commoditized, that just might not be for you, right? That's just not what I do. I don't go to the JW Marriott and expect that to be as cheap as the Fairfield Inn. But when I go to the Fairfield Inn, I don't expect it to give me the JW Marriott experience. And then you mentioned that your particular lead, Sarah, weren't really referred to you the right way. Right? The right way to me is I'm referred this way. Hey, call Dustin. He's great at what he does. He will take awesome care of you. That too I trust. Like when you're referred that way, then like, by the way, 1/8 of a rate or 1/4% of rate, I think a lot of times as mortgage professionals, I'm a baseball player by youth. I struck out on deck, right? So on deck is like where you stand before you go to plate. It's where you see the guys and girls are warming up their bats and stuff and stretching. Mentally, I was so weak, I would strike out on deck. I was so afraid of that pitcher that it didn't matter what pitches were thrown, I was going to strike out. We as sales professionals, we strike out on deck too, right? Oh my God, so-and-so has a cheaper rate than me. But if I'm dropping someone from 4.5 down to 3 1/4, that's still a hell of a savings. But in my mind, I might have struck out on deck. So one of my suggestions, anyone who negotiates or talks rates to consumers, don't strike out on deck. If they're going from 4.5 down to 3 1/4, and 3 1/4 is at a rate and a payment that they're happy with, and you trust that your service is still going to be better than anywhere else they go, does it matter that their payment's $25 more a month with you than it would have been somewhere else? When you still saved them $1.50 and you gave them a certain service or client experience. And by the way, that $25 a month, how long are people going to have this mortgage for, on average?
5 to 7 years.
Okay, I hear 5 to 7 years. Anyone think more or less?
Yeah, probably a dozen.
Yeah, let's say 100 months, like 9 years, right? 8.5 years-ish, 8.5 years, 8 years, 4 months. 100 months times $25 is $2,500. That's how much extra your loan would cost. Just make sure you're giving $2,500 worth of experience and professionalism. Because did you give them 3 options? Right, because it's not just about rate necessarily. Sometimes they think it's about rate because they don't know what else to ask. What it really is about is finding the best loan for their current life situation. So maybe it's suggesting a higher LTV with no monthly mortgage insurance. Maybe it's suggesting a cash out refi. Maybe it's showing them paying points, not paying points, all based on their situation, and approach it that way. And still know on a purchase, maybe 1 in 10, they're not going to value your experience on a refinance, and maybe 2.5 out of 10 aren't going to value it, and then have that conversation going in. Like that's something as sales professionals we don't do a good enough job of, which is setting our boundaries. Like I'd rather Patrick tell me, no, I'm not going to work with you now, instead of 30 days from now after I've already written 3 pre-approval letters, run numbers on 6 different properties, and taken his calls and his texts on nights and weekends, just for him to tell me that it's coming down to an 1/8 in rate and $395 in lender fees as why he's not going to use me. So I'd rather tell Patrick up front, hey Patrick, by the way, you were referred to me for a reason. So instead on your end, you can't really say that. So then the goal would be, how do I find more people where I can say that? You're referred to me because I'm really good at what I do. And things that I'm really good at are X, Y, and Z, right? Whether it's I take a consultative approach, I give you 3 options, I attend your closing, I make myself available, I return all phone calls within an hour, and that's why you're going to work with me. But I need you to know that I'm not going to be the cheapest. I'm going to be the most competitive. Like I'm a competitor at heart. My company is a competitor at heart. Like we don't like to lose business, but you're always going to be able to find cheaper, and I'm not the cheap. I'm really good and I'm competitive. And if you're cool with that, then we can work together. If you're not cool with that, I'd rather you tell me that now so that I don't waste your time nor my time. That's really hard to do up front. It's easier said than done. I can stand up here and teach it way better than I can practice it, and it probably took me 7 years before I grew the courage to get up there and practice it. So to answer your question in the most basic form, I would tell you to upfront let them know that. Upfront let them know this is what you're getting with me. Better yet, instead of you dictating it, ask them, what's most important to you? Hey Sarah, I'm getting ready to structure a refinance for you, but going into it, I need to know what's most important to you. And try to get 3 things. And if they go quiet or they go silent, then maybe offer them some suggestions. Hey, is it important to you that I communicate to you throughout the process? Is it important to you that I give you 3 options based on your life circumstances that make sense, and I walk you through those options? Is it important to you that I make myself accessible? Is it important to you that I get this closed within 60 days? And then, is there anything else? And then of all this, where do rate and fees come into play? Because one thing I can tell you is I can be competitive. Like I work at Waterstone Mortgage. We have access to 50 different investors on the back end. What that means for you is when I go to lock in your loan, I'm not just looking at what Waterstone Bank is offering in terms of rates. I'm looking at Waterstone Bank, Chase, Wells Fargo, US Bank, Truist, which used to be called SunTrust. I'm looking at companies you've never heard of. Companies like Freedom or AmeriHome or PennyMac. And I'm gonna lock in your interest rate based on your scenario. So I'm always gonna be competitive, but I might not be the cheapest. But that's okay, because I found in life, cheapest isn't the best. At least for me, it isn't. For example, I won't fly Spirit Airlines. I fly Delta, I fly Southwest. If I have to, American and United are okay as well. Anything not named one of those 4 airlines, I don't. And I just have life experiences that have taught me otherwise. I don't know if you have any life experiences that have taught you otherwise, whether it's maybe you shop at Target and not Walmart, maybe you eat at Burger King and not McDonald's, or only Chick-fil-A. Your finances should be the same way. So like I find a way to loop all of that in depending on the person and following the gut, and I understand that I'm not gonna win at all. And if it's just about cheapy cheap, you know what, Sarah, if you just want the cheapest, I'll make it really easy on you. You said you don't care about the best loan, right? Oh, wait a minute, stop. Yeah, no, you said you want the cheapest loan. Oh, you don't, so there's a difference, Sarah. There's a difference between cheapest and best. Yeah, I'll make sure I help you get the best loan for you at a competitive interest rate. But if you just want cheapest, I'll make it easy. Go online, fill out one of those questionnaires, talk to all of those lenders that are in New Jersey or Omaha, Nebraska, or all these areas that you can't go see them and get a rate quote. Bring it to me and I'll tell you which one's the best. Like, I'm going to help you one way or the other. I'll tell you which one's the best. Whether you should use Amerisave or Better.com or all of these companies that imagine 100 people sitting in a call center with a headset, shoulder to shoulder. That's just doing your loan. They'll give you a cheap rate. Don't know if it's going to be the best loan though. But nonetheless, I'm still here to help you. Because I know eventually you're going to need to buy a house. And when you go to buy a house, I'm your girl. Now, here's what I do know. When they bring me that loan estimate, I'm going to take it to my manager. I'm like, hey, how close can we get? How close can we get? And give them a call. But I always try to win it with my brain and trying to talk to them in a manner that they're not used to. Like, I'm going to talk to them as if I'm their life coach or I'm their financial advisor, which is why we said last week, like, hey, if you don't know this stuff, go out and seek the information. Even if you start with the Dave Ramsey book, which I know you're a Ramsey guy-ish.
Know of it, yeah.
Know of it, yeah. It's a good start. It's a good start. Like, I guess like anything in life, like you have to start somewhere. I'm not a huge Ramsey fanatic, but man, if you knew Dave Ramsey and you could teach it to your clients, especially if you're able to swipe and adapt and teach it like